Hello, everybody. Welcome and welcome back to the Theatre of Dreams that is the Modern Investor Summit 2024. This is the sixth session of day one. Remember, this is a two-day summit. For those who need a reminder, I'm Carl Hazley, Head of Content here at Finimize, and I am delighted to be hosting this session on investing in AI and the opportunities it opens up pre-IPO and in private markets. Now, before we dive in, I'd love to spend a moment to say thank you to our session partner, Linqto. Linqto is a pioneer in private market investing, making it easy and affordable for accredited investors to access shares in pre-IPO companies. Their platform empowers individuals to seize early stage investment opportunities in high growth sectors, including artificial intelligence and emerging tech. Just a bit of housekeeping before we get started. Please use the chat to introduce yourself. Let us know where in the world you are, what time of day it is for you. Say hi to everyone else in the chat. In terms of format, this 30-minute conversation between Bill and I will be populated by your very own questions. So please put your questions in the chat, in the Q&A box. We will work through them as they come up in our conversation, and I'll leave some time at the end to make sure we can get through as many of them as possible. Now, I mentioned Bill. Who is Bill? Bill Sarris is the co-founder and CEO of Linqto. Bill has a wealth of experience in tech and finance, and his work at Linqto is all about helping retail investors get access to some of the most exciting AI startups before they go public. Bill, thanks for being here. How are you?
I'm doing great, Carl. Thanks for having me.
Absolutely. Delighted to have you here. Let's start by level setting everyone about the market forces at play here. So, in public markets, there's the rise, the meteoric rise, the continued rise, what have you, of AI. That's also happening across private markets. And we're also seeing the growth of private equity and other alternative asset classes more broadly. And Linqto sits bang in the middle of all those forces. So maybe just to, again, get everyone on the same page, please let us know a little bit about the company and how all those tailwinds I've just mentioned are helping you guys right now.
Yeah, so thanks, Carl. To start, let me just give you a little bit of history. Linqto created this platform 5 years ago in order to democratize investing in private equity. Private equity investing was formerly the exclusive domain of high net worth individuals and large institutional players. And Linqto has enabled investing in unicorns by ordinary folks like us. To accomplish this, we had to solve for three existing barriers to entry: accessibility, affordability, and liquidity. So we provide accessibility with our advanced tech platform that simplifies the process via a T0 settlement model that we created. You no longer need to know a guy who knows a guy. Linqto's unique business model enables affordability with minimum investment sizes of $5,000 and even less for a first-time investment. We're not the traditional brokered listings model where the platforms have no skin in the game, and we're not the typical fund model where they raise money from investors and then decide how to spend it. We don't have management fees or carry. What we do, Linqto purchases large blocks of shares with our own capital and then creates special purpose vehicles with those shares that allow our investors to choose the companies they want. And only after we've done our due diligence and made an investment ourselves. We always invest first. And of course, this model also comes with a unique capacity in the secondary market for liquidity, as the units that are purchased from these SPVs can be sold back through our alternative trading system or traded for other companies on the platform. Accessible, affordable, liquid investments that allow any accredited investor the opportunity to build a diversified portfolio of unicorn investments with a minimum investment amount in this asset class. That's Linqto.
That's a fantastic introduction. And what I find fascinating is that that those 3 points, accessibility, affordability, and liquidity, are, if I look at neo brokers and other challengers across the space, you maybe get one or two of those. And having developed something that tackles all three is testament to your work there. So I guess the natural follow-on question, I guess just with an industry lens on, before we sort of get into AI a bit more, is how do you see the role of, traditional venture capital, which maybe plays more in the AI space, and traditional private equity, which is, I guess, across the piece. How do you see those platforms, those asset classes evolving as the likes of Linqto open up private investing to a broader audience?
Yes, I mean that's a very good question. It's not mutually exclusive. What we do is actually an advantage for VC firms and traditional investing models. Linqto assists the traditional VC market by providing liquidity to funds prior to exit for early stage VC funds, as they approach the end of their fund life. For example, we purchased over $40 million of secondary shares from one VC firm last year. That was an early stage firm. Linqto can also assist VC firms in raising capital by leveraging our large investor base. But mostly, I think we see the advantage for venture firms being able to utilize Linqto.ai and futures of artificial intelligence for due diligence, deep research prior to making investments. So we provide hard to find data about private companies that is not readily available online. AI helps with competitive research, and VCs often would like to know trends across other investor firms. For example, you could go to Linqto.ai and ask which investors invested in both Anthropic and Cerberus to derive the intersection of firms that might be willing to participate in a new primary round in XAI. Of course, the answer to that from Linqto.ai would be Bessemer Venture Partners and Cochu. There's many questions that you could ask and get answered through our deep wealth of proprietary private data that we've accumulated over the years that's just not available elsewhere.
Fantastic. So on the one hand, you're arguably disrupting the likes of VC, but on the other, you're also providing them and others access to previously unstructured data, or still unstructured data, but that you've managed to wrap your arms around in a way to structure it.
Yeah, exactly. We don't see ourselves as disrupting the VC market. We see it as helping the VC market.
Got you. Okay, let's dive into AI and those pre-IPO opportunities. Big picture at first, what shifts in AI tech or strategy do you think will redefine how early stage, or how we approach these early stage investments over the next 3, 5, 10 years?
Well, that's a very big question.
Okay, let's break it into
Artificial
chunks.
intelligence is going to completely redefine how we invest over the next decade. Some areas that I can think of off the top: automation and efficiency will probably come first. AI will further automate due diligence processes, making it easier and faster to evaluate potential investments. And this will lead to more informed decision making and reduce time to close deals. You can check out Linqto.ai for a generative AI example of how this works now. We're developing that for today and into the future. I think the second piece would be predictive analytics. Enhanced predictive models will provide better insights into market trends and startup success probabilities, helping investors identify promising opportunities earlier. Average investors will have the same inside information and research as billionaires. So AI is going to be a super help as we go into the future for our retail investors and average investors to get involved with investing. Another element of that is personalization. And when you think about it, for 1,500 years, we've been dealing with things like personas and archetypes. And with ML and AI, everyone is an individual person now and can be treated individually. So AI-driven personalization will allow investors to tailor their portfolios more precisely to their risk tolerance and investment goals, potentially leading to more optimized returns.
So
And
there's something you said there, Bill, that made my my ears prick up and my eyes widen, which was more informed decision making. So I want to spend a bit of time, if I can, just on that.
Okay.
And I guess the question, and it taps into Adam's question and GR's question in a sense, but please rewrite your question if I haven't quite understood it correctly. How do you determine which AI startups are genuinely transformative versus those that are, just riding the hype wave?
Um, well, I mean, that's that's an important question because part of it, we have a two-sided model. One is, providing investments for our members, and in order to get good investments, we probably look at 10 or 20 different companies every week, our investment committee. And in today's world, every emerging startup is self-described as AI. It's not
Yeah.
dissimilar from the .io of the blockchain craze, or even the .com era when simply having a website gave someone credibility.
Yeah.
But much of today's proclaimed artificial intelligence is it's neither artificial nor intelligent. Uh, high potential AI companies, the way we define them and look for them, they're usually breaking new ground, Carl. They're not
Mm,
just leveraging other tired ideas. The movement of AI is so exponentially faster than Moore's law that by the time a new technology enters the market, it's already obsolete from the perspective of, let's say, a second market play. There are no longer chances for Facebook to replace MySpace by doing it better.
mm,
Marshall McLuhan said, "We drive into the future looking in the rearview mirror." Well, to find the next big thing, one needs to predict the unpredictable. The AI companies to invest in early really are. It's those companies you believe today to be science fiction. Really, I think the lunatic fringe is where we're going to uncover the next Elon Musk.
fair enough. I mean, are there specific indicate, or maybe put another way, if I look at in a former life, I covered internet companies, and the way I built my investing framework was to look at the most successful internet businesses, figure out what they had in common, and then try and map that onto the smaller companies I was covering. And so, are there indicators that you look to? Is there any pattern matching that you can do, that we can do, to start to understand if something is high potential? Whether or not that's fulfilled is another challenge altogether.
Well, that has to do with predictability and looking into the future by gauging things from the past. As I said, it's becoming more and more difficult because things are
Mm,
moving so quickly. But the basic principles that you're talking about, Carl, still apply to investing. You
yeah,
can look at what's going on now, and if you look at the big players, Anthropic and OpenAI and XAI, and look at the kinds of things they're doing, or the big chip makers. What happened with NVIDIA that's now exciting with Cerebras and some of the others that are coming along behind it. There are a lot of trends that you can look at for the future. But I think looking into the near term future, some of the things that are exciting to me, exciting to us, um, I think solving for the world's major crises
mm,
will be the next big move in artificial intelligence, looking for AI that's being utilized in commercial sectors
yeah,
and not just chat GPT stuff, where breakthroughs are going to mean insane profits. I don't know if you read Ray Kurzweil, The Singularity is Near, but I do recommend that to all the viewers. He outlined some future AI trends over the next 20 years, but specifically some of the things he talked about in this decade, in the 20s, imitative generalization, which is training AI to imitate how humans draw inferences,
yeah,
so as to make it safer and more reliable when applying its knowledge to unfamiliar situations. And then there's AI safety via debate, which uses competing AIs to point out flaws in each other's ideas. And that's allowing humans to judge issues that are too complex to properly evaluate ourselves. And iterated amplification involves using weaker AIs to assist humans in creating well aligned, stronger AIs. and repeating this process to eventually align AIs much stronger than unaided humans could ever align on their own. We have to think of is AI is not, artificial intelligence is not the industrial revolution. It's not the technology revolution or the agriculture revolution. It's not a change. It's really evolutionary. It's not revolutionary, and it's going to change the way we view the world, change the way we do things, not just in investment, but with everything we do in life. So that's what's exciting to me, is being on the cusp of all this that's happening. I'm really glad to be involved in it.
Yeah, there's a lot of exciting stuff going on. Absolutely. And maybe it's worth, before we get into or switch gears a little bit, there's a couple of questions here from both David and Adam that I think we should spend a bit of time on, which are they're both asking around, how do you think about diversifying a private market portfolio? Or put another way, how many companies would make sense to consider yourself diversified? And I guess big picture, we're not necessarily diversified in terms of asset class or even the assets within that, but to the extent you can, is that even a reasonable approach, Bill?
Well, yeah, I mean, first I want to say I'm an engineer by background. I'm not an investment advisor. And so what I say about here today about some of the investment advice, it's really just my own opinions. It's not necessarily the advice of a counselor. I'm not trained in that. I'm an engineer, but I do have my own strategy as to individual investing, and primary to that strategy is diversification. I mean, most retail investors don't have $5 million to put into this asset class. If you have $50,000 to invest in this asset class, putting it all into a single company is kind of a bit like placing it on 17 red at the roulette table.
Yeah.
You could make 10 investments of 5K each, and that'd be much safer, because if we don't know which ones are going to be successful, so if you picked 3 of 10 winners, you're still going to make a sizable return on it. And averaging 300, well, that's not a bad betting average. So yeah, I really very much believe in diversification as part of why we designed the Linqto platform and how we do things, to make the investments, the minimum investment sizes, low enough that an individual can invest in multiple companies and not just have to put it all into one company.
Fantastic. I think that also sort of covers off strategies and safeguards, which would have been one of my other questions. But Adam and David, you beat me to it. I wonder whether we can spend a little bit of time on accessibility, which we talked a little bit about up top. From a Linqto point of view, what are the challenges that you've come across when it comes to democratizing access? You mentioned that you buy up whether it's secondaries or shares in these interesting, exciting companies. So I guess capital, being able to deploy that capital is one barrier. But I'm just wondering what the challenges are, how sort of how you're trying to solve for those, just to build a market where, by your own admission, 5 years ago, this didn't really exist.
Yes. Well, some of it, Carl, is about the world advancing itself, and the world is changing. So when we started all of this, it was much more difficult to get involved in private companies than it is today. But much of AI, people here are interested in investing in AI. I mean, almost all of AI is being developed by private companies. So one needs to be an accredited investor to invest in private companies. And that's been a difficult piece over the years because of government regulations. But government regs regarding accredited investors, you have to remember, they were created in the 1933 Securities Act. Yeah. And they place arcane limitations on who can invest in these companies. I mean, regarding AI and computing, how obsolete is a law that was made by lawmakers in 1933? Look up the word digital in Webster's dictionary from 1933. It says pertaining to a finger.
Yeah. Oh gosh. I
Well, we have
suspect it's
new law.
also not inflation adjusted either, that
Yes,
250K limit.
but we have new laws now, like HR 2797 has passed through Congress, waiting for the Senate. That's going to make it a lot easier for accredited
Yeah.
investors to become accredited. There's new leadership in the SEC with Gensler stepping down. There's a favorable Supreme Court, as evidenced by the repeal of the Chevron decision. All these are going to usher in changes that will allow retail investors a much broader pathway to invest in private companies. And Linqto has been a champion of this for 5, 6 years. We've been championing the democratization of private equity, not only with our technology, but in Congress and in meeting with the SEC and giving advice as to how to champion this forward. So I would say look forward to a lot of changes in technology that will enable easier investing in these spaces, and also changes in the new climate that's going to be, especially in the U.S., coming in with the new administration that's coming in.
Absolutely. Something to watch out for. I'd love to bring in a question here from Paul, who I think it's a pretty optimistic question, but it's certainly one worth exploring. So, after a stock goes public, what are some of the restrictions in place to access your proceeds? So, I guess in this scenario, you've invested via Linqto, you found, the gangbuster going AI play, and it's listed on the market. What does liquidity look like? What does exiting look like? And how should Paul think about that?
Yeah, so I mean, we keep the shares ourselves in custody until a company goes public, and then those shares are released on a one-to-one basis over to the investor in their brokerage account. Now, because these are investments in private companies, there are often lockup periods, and we have to engage with those lockup periods the same way any private investors do. So it could be 90-day lockup, 6-month lockup. Sometimes there are none. It depends on the company. But the shares are issued as soon as the lockup period is over, and then you simply own the shares, the same number of shares. You just own them out in the public market instead of owning them on the Linqto platform.
Very clear. Thank you very much. We're coming up close to time. We've got about 7-8 minutes left, so please do drop your questions into the Q&A box if they don't get answered. As Bill said, Linqto.ai can probably help answer them, but we've got the man himself here, so there's no one better. So please do get your questions in before we run out of time. Bill, I'd like to spend a little bit of time on the ethics of AI, which, we could do another 20, 30, 40 minutes on in a separate session. And we probably still wouldn't get very close to solving those issues. If we did, we'd probably be doing different jobs. How do you think about balancing the attraction of AI, all of these new applications, from efficiency through to personalization, through to substitution of various types of work, with the ethical considerations? And this ties into Suleiman's question. How do you think about regulated markets in AI, whether that's healthcare, finance, tech, although tech is probably less tightly regulated, I'd argue, at least for now?
Yeah, I mean, that's a pretty deep question, Carl. First of all, again, these are just my opinions, but a lot is said out in fake news and to fearmongers about the potential evils of AI. We have to remember that AI works on both sides of good and evil. As technological advancements develop, AI is also being used to protect humanity from the dangers that new tech may inject. For example, in terms of compliance, Linqto needs to protect its platform from money laundering. When we launched, we were able to manually check the OFAC list. Now we check 139 sanctions lists globally. Things, as AI progresses, it's kind of like the nuclear scares of and apocalypses of the 60s. And here we are, we're still around. AI will progress along with AI on both sides of the coin. In 2017, at the Asilomar Conference on Beneficial AI, some useful principles were established. The Asilomar AI principles provide a foundation for responsible AI development that's been shaping the field in a very positive direction over the years. 6 of the document's 23 principles promote human values or humanity. For example, Principle 10, value alignment, states that highly autonomous AI systems should be designed so that their goals and behaviors can be assured to align with human values throughout their operation. Another document, the Lethal Autonomous Weapons Pledge, promotes a similar concept. We, the undersigned, agree that the decision to take a human life should never be delegated to a machine. There is a moral component to this position that we should not allow machines to make life-taking decisions for others, or nobody will be culpable. And I think the issue comes in with government. Wow, such influential figures as Stephen Hawking and Elon Musk and Martin Rees and Noam Chomsky have signed the ban on laws. Top military powers, including the United States, Russia, the UK, France, Israel, have rejected it. I think the future danger to humanity lies more on the government side than the private sector. So we must be sure to protect our survival as a species through responsible government, and AI will take care of the rest. AI is a very positive thing for the world and not a negative journey.
I would. I wonder whether, entrusting our future to responsible government is a bit of a tall order, considering some of the things going on in the world right now. I also wonder whether I take your point that AI is, the evils of AI are balanced by the good of AI. I suspect people making that argument are worried about the evils of man being amplified by AI. And this obviously is a poor example because it's sci-fi. But if you look at, the like iRobot and so on, where the natural conclusion of protect people is, wipe out people because they can't be trusted to protect themselves. But I think I'm getting quite hysterical just thinking through it. So I'll stop myself there, Bill.
No, I think you make an extremely valid point about this issue, Carl, because we get most of our feeling about AI from things like HAL in 2001, A Space Odyssey, or watching Arnold. But that's I don't see the future of AI as being robots and machines that are going to take over for humans in the world. I see it as advancing humanity, as humans getting better. But we've used computers for so many years, and at every stage of computing, it's helped us to advance. I mean, who can imagine 50 years ago, it would cost you $5 million and you'd have to be a government or a large university just to have a computer. Now every person in the world has a computer in their hand that's 10,000 times as powerful as those computers were. It's those kinds of things. As AI advances, we'll have biotech breakthroughs. We'll have clean water will be available to all people in all villages because you'll have answers you'll be able to use in your own house. And the production of food will solve world hunger. As we solve all the problems of the world, much of the problem with government is from conflict that's generated between the haves and the have-nots, and AI helps us to kind of level that field. So I'm very optimistic about that. You can tell I'm very optimistic about the future of AI.
Good. Yeah, no. And so you should be. I've got maybe 2 questions before we wrap up. I'll try and squeeze in, and they're sort of based on the deal flow that you see at Linqto regularly, the deal flow you see regularly. Obviously, you need to invest in these companies in order to present them to your accredited investors. And so Lynn asked whether, I guess from your deal flow, are you seeing underserved sectors, underappreciated opportunities where AI could make a difference? And again, founders aren't necessarily attuned to the opportunity. And then secondly, from Sheu, wondering really what the exit route is from these companies that they're coming across. Are they looking to get acquired, or do they sort of plan to be independent companies that IPO in their own right?
Well, I answer the second one first. A lot of M&A happened between like 22 and 24 because of the lack of an IPO market. But our IPO market is really heating up and getting strong. So I think, and it's just my opinion, you'll see a lot more of exiting through IPO. But there are so many large companies now in this space that they're also starting to gobble up the smaller companies. So, that you might see a great deal of that activity too. In terms of what industries to look for and how this is going to affect things, as I said, I think this is more evolutionary, and AI will affect every industry. So it's more about choosing those companies in whatever interest. If you're interested in biotech, if you're interested in education, if you're interested in any sector, digital assets, whatever sector you're interested in, I would look for the AI solutions in those sectors. Which of those companies are now engaging with the future through AI, and which are still trying to hold on to their old tech, and that might be something to look for, not specifically an AI company, but companies that use AI successfully.
That nugget of wisdom, Bill, is a perfect place to leave things. So, Bill, I want to thank you. You've been fantastic. Loved hearing from you, and hopefully having you share those insights with our watching and listening audience. I hope you all enjoyed the session. I certainly did, and I've got a lot to take away here, including the future of AI not necessarily being quite as scary as some might think, and more of an evolution. But don't go anywhere. Coming up next, we have investing in lawsuits, an untapped market for individual investors. That starts here in 13 minutes. Bill, thank you so much. And we will speak to all of you very soon.